Hello everyone, welcome to my live stream once again. Nice to see you all again on this Saturday afternoon. I hope that you are doing fine. All right, ladies and gentlemen, who is here? Who is here? Can you say hi to me if you are listening to my live? Yes, I see Queenie. Oh, Queenie, you are here again. Thank you very much for your dedicated support. I know you have cleared this paper like a long time ago. You even cleared SBR. So come on, you are in a very good position to give advice to your junior here in terms of how do you get the most. How can you pass this paper easily? Now, FI is not a difficult paper. Oh, Jaren is here, my student. Hi, Jaren. Welcome, welcome. Anyone else is here? You feel free to say hi to me. All right, feel free to say hi. I would like to see. I would like to know who is here. Well, in the meantime, while waiting for the comment to flow in, let me just set up my screen sharing. Hopefully, it works. Yes. All right, it works. All right. So yeah, no one else is here. Okay, no issue. Oh, Yishen is here. Hi, Yishen. Oh, hi, Shalene. Hi, Shalene. Hey, Shalene. Long time no see, Shalene. Are you taking FRD this semester? I don't think so, right? Because I don't remember you are taking ACCA, but it's okay. You can still listen. It might be relevant to your whatever program that you are studying now. But okay, anyway, ladies and gentlemen, let's just get started. Now, today we are going to talk about the FR exam, right? So the FR exam. Now, the FI exam, just a quick one is that if you are familiar with the syllabus, right? The exam consists of three sections. You have section A, you have section B, as well as section C. Yeah, you're here to listen. Welcome. No problem. You might learn one thing or two from this live sharing. You'll definitely learn something. Okay, section A consists of 15 MCQ. So 15 MCQ can be from any topic. But it's just like one question. Section B is also 15 MCQ, but this one they involve three main case study. Okay, three main case study. So they'll give you like a case study. So one case, 5 questions. Hi, Elaine, welcome. Elaine, how are you doing? Long time no see since I think years ago. Yeah, hopefully you're still doing well. Yeah, thanks for your support. All right. Then section C, right, is you have two constructed response question. So you have two constructed response question. Now these two questions, right? You can either get individual financial statement, right? You can either get individual financial statement or consolidated financial statement. You can also get you is this one or an analysis question. Analysis means the ratio analysis question. So this is the question in which students normally suffer. This one. So today, I'm going to spend quite a bit of time to go through some technique with you, especially on this ratio analysis question, because I felt that even though this one student may find it difficult, but I still think that there are ways for you to do. And you just need to remember some of the technique. I'll give you like a structure. When you comment, right? How do you comment? Like the first step, you should write what sentence. Second step, you should write what sentence. I'll tell you. And then in the exam, you just try your best to write as much as possible. We try our best to maximize the marks. And then the individual financial statement or console here, this one tests your Excel skill. So I can say that in the in the ACCA skill module, right, the applied skill module, Excel intensive exam, one of it is FR, because you need to prepare financial statement using Excel. Now, not just that, you maybe not just FR, maybe in other paper like FM also you use quite a lot of Excel. But anyway, I'm going to show you some do's and don'ts about this Excel later on. So my focus for today is not on section A, section B. Okay, section A, section B is not my focus, but my focus is on section C for today. Okay, we are going to look at the September, December 2021 question, the past year paper published by ACCA. So we're going to go through these two questions. So now it's 3:08. I will see. I think I will need to conduct this session until 5 o'clock. I think so. Maybe we allocate 1 hour for each. Although I promise you like 4:30 it will end, but it's okay. I give you more value. Likely it will end. It will end at 5. Okay, so ladies and gentlemen, are you ready to start? If you are ready to start, you type yes. And if you want to pass this exam or in the future, like I know some of you here may not be studying ACCA, but in the future, if you want to pass the exam of ACCA, say yes, ladies and gentlemen, say yes. Let me see yes. spam the chat box. Let me see who are you are here. Among you, who are you are in this audience today? Say yes, ladies and gentlemen. Yes, I can see Queenie, very energetic. The rest of you, I want to see your yes. Okay, I want to see your yes. Now, while waiting for you to type in the response, now let me just bring up this ACCA practice platform for you to have a look. All right, yeah, it's here. Yes. Oh, and even Angel is here. Hello, Angel. Hi, hi, hi. Welcome, welcome. Yeah, you also passed this paper already, right? But it's okay. It's always good, to listen, to listen to this again, since it's related to your exam anyway. Now, okay. Yeah, hello, hello. Okay, now, ladies and gentlemen, you see this one, right? This one, the question here, they ask you to prepare the statement of profit or loss. Okay, so we will go through this question first. We go through the Excel question first. They ask you to prepare the statement of profit or loss, which means you must know the format of the SOPL. Okay, of course, to pass this exam, you cannot tell me you don't know the format of SOPL. You have to know the format of SOPL. They also ask you for statement of changes in equity, fair enough. And then they also ask you to prepare the following extract from the statement of cash flow. So statement of cash flow is examined, but it's only like extract 3 marks only. It's not difficult. It's not difficult. I know some of you here are afraid of statement of cash flow. Now, anyone here are afraid or used to be afraid of statement of cash flow? You type 111. I just want to see, just a quick survey. Any one of you here is a bit phobia? When you see this thing called statement of cash flow, you get a bit phobia. 111 to let me know you are phobia. You have the phobia of this. But let me tell you, ladies and gentlemen, you don't need to worry. Oh, I changed the sound card setting a bit. Okay, you don't need to worry. You don't need to worry because statement of cash flow in FR exam, if it comes out in section C like this, it will not be difficult. It will not be difficult. So you don't need to worry. Okay, you don't need to worry. So anyway, how are you supposed to answer this kind of question? You are given a spreadsheet here. So the technique is you have to put in the pro forma first. You have to put in the format first. When you put in the format, you leave some blank, you leave some blank, and then you try and plug in the figure later on. Then it will be better. It will be better rather than you do from top to bottom. But I will show you the technique that I do. My technique is I prepare the format first, and when the format is out, then we try to plug in the figure, and then finally, hopefully, it balances. But don't worry, even if it don't balance, right? There's no marks given for the total of your balancing figure. No, no, no. The examiner, ladies and gentlemen, you maybe if you have a paper in front of you, you jot this down. The examiner has said that some students lose precious marks because they forgot to put in figure into their Excel. Like some figures are here, they forgot to move it into Excel, And when they forgot to move it into Excel, easy marks are gone. And that's very sad, ladies and gentlemen. So when you do this, right, you make sure that you transfer all the information to the Excel. The examiner highlighted some students don't do that. They lose out a lot of easy marks. So this is one thing that you have to know. Jot it down. Okay, jot it down. Remember to transfer everything in. Now, another thing of transfer is that you should know statement of profit or loss, right? When you calculate the profit or when you calculate the loss, it has to be transferred to statement of changes in equity. Okay, because right, the statement of profit or loss, it will flow into statement of changes in equity. Remember to link, because this kind of linking, right, is awarded marks one. Marks are awarded for this kind of linking. So make sure you link. And the question didn't say that you have to prepare statement of financial position. Do you need to prepare that? Of course, no. Don't waste your time. The examiner says some students, they're very pandai. Although the question didn't ask them prepare SOFP, but they think that their exam, they have a lot of time. They go and prepare SOFP. Don't do that. You don't have time. Do you know how much time you need to spend for this question? 20 marks. Assuming 1 mark is 1.8 minutes, you can only spend 36 minutes, ladies and gentlemen. 36 minutes only. So you think you have a lot of time? You don't have enough. You don't have enough time. If you tell me you need to 1 hour to do this question, you are too slow. Too bad, you are too slow. You have to be fast. Half an hour, a bit more. Then you have to next already. You have to go next to the next question already. That is a fact, that is a fact. If you use the marks as a basis to allocate your time, so you need to strengthen the speed a bit. And I'll tell you how I do, right, is going to maximize the speed. Okay, yes, I see Queenie says this. Classification, don't know, must be investing, financing, operating. Okay, to answer your question, right, the idea is like this. Generally, non-current asset, right, investing. Financing is generally non-current liability and equity. Operating is like SOPO item, current asset, current liability, all those things. Okay, Esther says, I never get a balance in the journey of study accounting. It's okay. Next time when you work, when you work, you use software, right? The software will do the double entry for you. That one, confirm balance one. If that one cannot balance, it must be software issue. Don't worry, 3 imbalanced thing in the world. Balance sheet, eyeliner, eyebrow. Okay, I don't know about 2 and 3. 2 and 3 is gender specific. I don't know about that. Yan Chen is here. Welcome, welcome. Welcome. Okay, so ladies and gentlemen, now let us prepare the pro forma first. Okay, but before that, you look at this trial balance. We just quickly look at what are the things available. Then you know roughly like what are the things that you are supposed to put into your pro forma here. Okay, we see revenue, we see cost of sales, admin, distribution, income tax, all right? Deferred tax, okay, provision, retained earning, equity, all these are SOFP item. Intangible asset, investment property, okay, we have finance costs, we have investment income, okay, we have investment income and suspend account, all right? So I think I know roughly what I need already. So you see, ladies and gentlemen, make sure you remember, you label your answer properly. So first, you always start with A, all right? A, then you put in the title. Normally, I will put in the company name here. The company name here, then statement of profit or loss. All right, statement of profit or loss. For the year ended 31st December 20x5. Now, this is very annoying. Okay, this is very annoying. Yeah, sometimes it happens. Okay, sometimes it happens. Okay. All right. Then, okay, let's just put in the pro forma. Normally for S or PL, we just need like one column for the dollar. Okay, we have revenue. All right, revenue. Okay, so once the figure is here, I'll just type it in. Okay, you see, because if I can see the figure, I'll just type it in straight away. Okay, then what else? We have cost of sales, right? Cost of sales. Now, take note, ladies and gentlemen, this is my habit. For cost of sales, right? Because it's a cost, I will automatically put a negative here. So I will put here negative 11600. Okay, maybe I zoom in a bit. Can I zoom in a bit? Okay, can. Right, because I don't know whether you can see or not. Then, okay, we have the gross profit. Notice, you see, I put in some empty line here in between. In case if I need to add something, I have the line. Okay, then I get the sum of this. Now, I heard, ladies and gentlemen, correct me if I'm wrong, but I heard from my previous student that when you are sitting for the CBE exam, if you don't type this close bracket, right, the formula doesn't work. Is that correct, ladies and gentlemen? For those of you who are sitting, who has been sitting for CBE exam, can you confirm with me? You say yes if this is true. You say yes if this is true. If you don't type the close bracket, the formula doesn't work. Is that true? Because I heard, I think I remember vaguely my student did told me. I think it's true. So in any case, you remember just type the close bracket. Oh yes, annoying, annoying. Okay, I pity. I really kasihan all of you, But what to do? Just live with it. Okay. What else? We have admin expenses. Okay, so I put in administrative expense. Okay, administrative expense is 10900. Okay, distribution cost 7300. Okay, then what else? Income tax later. I remember something below. There is a finance cost. There's an investment income. Okay, so I'm going to put maybe investment income. Investment income is 500. Then finance cost minus 1400. Okay, then I should be able to get I should be able to get my profit before tax. Okay, my profit before tax. Although negative, a loss. So in that case, I'll do like this. profit, then bracket loss before tax. Okay, because I don't know whether is it profit or loss. Then I have income tax. Okay, so I have tax expense. Okay, tax expense. But this one, right, is 140 debit. So minus one. Debit side, so it has to be the minus lah, 140. Okay, so I key in 140 first. Then after tax expense, then I have profit for the year. The profit for the year is like this, but this one likely to be a loss, right? Likely to be a loss. So profit dash loss for the year. Okay, then I have the loss for the year. All right, so ladies and gentlemen, you see, this is what I call pro forma. We just key in whatever pro forma that we have first. Okay, then you may want to leave a few lines and then you start B. B is statement of changes in equity, right? B, yeah. So maybe I leave like 3 lines, then I start B. Okay, MIMS core statement of changes in equity for the year ended 31st December 20x5. Okay, now for statement of changes in equity, it is, as you know, right, it is a statement that summarizes the movement in the equity. So we need to find out what are the equities that we have. We have equity share capital, we have retained earning, and what else do we have? Okay, we have equity share capital, we have retained earning, and we have, I think that's it, huh? I think that's it. Okay, so there's no share premium, huh? Interesting, there's no share premium. So maybe later on when you read through the adjustment, there might be some share premium, but it's okay. In that case, right, maybe I'll just type here, equity share capital, equity share capital, then I don't know. I think there might be share premium. If there is not, then I delete later. Then retain earning. You see, ladies and gentlemen, in this stage, right, if you type retain earning here and you put share premium here, is that okay? The answer is okay. Don't worry about this. The arrangement left to right, whatever, it is not important for this exam. It's not important. The examiner just want you to see whether can you link the figure properly or not. Okay, and this one again is in 1,000. Okay, 1,000. All right. So the balance brought forward. The balance brought forward. Okay. Balance brought forward. Or maybe I follow the case. Balance asset 1st January 20x5. 60,000. Right. Share premium, no. Retain earning 43,200. Okay. I know that I'm going to link the profit or loss for the year. To the retained earning. So, ladies and gentlemen, you see, this is what you can do. You can link it straight away first. You just link it straight away like this. Okay. Because if you link it first, later on you won't forget. I'm afraid that later on you might forget. You might forget. So yes, there's a question. I'm from the old syllabus. Is this paper under level 2? I'm not sure about level 1, level 2, but this one is in the intermediate level. I think it's level 2. Is the financial reporting paper under the ACCA. Now we call it the applied skill module. In the previous syllabus, we call it F7. F7. Don't know whether have you heard of F7. Now it's called FR. Okay, now it's called FR. So anyway, as I was saying, we are linking the profit or loss down. Okay, we link the profit or loss down in the retained earning. Okay, then we leave a few lines. Do we see any dividend? I don't see any dividend now. Okay, I don't see any dividend now. So, but I think we leave a few lines. So maybe we leave 5 to 8 line. We leave 5 to 8 line. So anyway, we may change this later on, but it's okay. I think I leave 8 lines just in case. 1, 2, 3, 4, 5, 6, 7, 8. Okay, then is C already. C, yeah. Now C is a statement of cash flow extract, right? Statement of cash flow for the year ended this one, then extract. Now, what did the question ask us to do? The question asked us to prepare the extract for cash flow from investing activity and cash flow from financing activity. All right. So in that case, cash flows from investing activities. Now, at this stage, I don't know what is in. I don't know what is in. So I'm going to leave quite a bit of line. Maybe I leave 8 lines. 1, 2, 3, 4, 5, 6, 7, 8. Then another one, the last one. Cash flows from financing activities. Okay, cash flow from financing activities. Okay, then I also add lines. Before I start this thing called working. Right? Because we need to do some working before we can complete this answer. So, ladies and gentlemen, I think one of the lessons that you have to know if you want to attempt this question properly is that you have to leave many lines. Just leave many lines. Like even though maybe you just use 1 or 2, it doesn't matter. It doesn't matter because you have to know no option for you to insert, which is also very annoying. Very annoying. So that's why I always suggest that you have to leave some line so that you still can amend your answer if it is necessary. And you see, right, for total, I only use bold. Do I bother to draw a line like that? Like, there are some format cell. No, I don't bother. I don't have the time, I don't have the time in the exam to draw underline. So that's why I just use bold to indicate that it is a total. Is that acceptable? It is perfectly acceptable. Don't worry, it is perfectly acceptable. Now, ladies and gentlemen, I think we can start to look through the information one by one now. Okay, so let's see. Okay, the first information. Memes Core noted that there was an error. There was an error in the inventory count at 31st December 20x4, meaning that the closing inventory balance in 20x4 was overstated by 0.7 million. No entry has yet to be made to correct this error. So in this case, ladies and gentlemen, let's check. What is our year end? Our year end is 20x5. Okay, I type in the title already, 20x5. This is error in 20x4. So what is this? This is an error in last year. Error in last year. So I do a quick revision with all of you. If there is an error in the last year, we are going to apply this standard. Okay, let's do a quick revision. We are going to apply this standard called IAS 8. Now, IAS 8 talks about 3 things. We talk about accounting policy. We talk about accounting estimate. We also talk about error. Okay, we talk about error. Now, the idea is if there is accounting policy changes, if there's any changes in accounting policy, or if there's any error, the idea is these two, we have to go for retrospective adjustment. Okay, we have to go for retrospective adjustment. If it is error or if it is changes in accounting policy. But if it is a change in accounting estimate, if there is any change in accounting estimate, we go for prospective adjustment. Now, what is retrospective adjustment and what is prospective adjustment? Retrospective adjustment means we are going to change the last year financial statement. We're going to change the last year financial statement. We're going to change the last year comparative. We are going to change the opening balance in the SOCIE, in the statement of changes in equity. So, ladies and gentlemen, which means, right, this is an error in the last year. This is an error in the last year, meaning to say our statement of changes in equity, I need to amend it a bit. So I need to put here error, prior year error. Then I get a new balance before I put in the profit or loss for the year. Now, ladies and gentlemen, before I adjust this, I want us to think, if you get this treatment, how should you adjust? So let us think properly. Let us think properly. Now, this is closing balance. This is closing balance. How does it affect your profit? How does it affect your profit? So hopefully in the exam, you will be able to recall this knowledge. In the SOPL is normally revenue. And then you less the cost of sales, right? You less the cost of sales. Cost of sales consists of opening inventory plus purchases, okay, and minus closing inventory. Okay, so what is the relationship between all these things? Okay, first thing first. I want to clarify something. In the exam, when I teach my student, I will want the student not to follow this sign that you are more familiar with. Because you see, this is what I will want you to do. Okay, I will want you to do. You see, opening inventory, right, is part of the cost. And cost is a debit balance. Cost is a debit balance. So I'm going to put a negative symbol here, negative for opening inventory. Purchases, I'm going to put negative. Then closing inventory, right, because it's less cost of sales, it becomes positive. I give you one example. I give you one example. For example, if opening inventory is 100, purchase is 1,000, closing is 200, right? We normally do it like this. We normally do it like this. We take 100 plus 1,000 minus 200. So we get 900, right? We get 900 like this. Okay, normally this is what we do. But when I teach my student Excel, this is what I want the student to do. I want the student to key in like this. Okay, I want the student not to key in like this, but they will key in minus 100, minus 1,000. But the closing balance here, put 200 lah. So then in that case, right, you just straight away use the sum formula. You use the sum formula, so which means you take minus 100 minus 1,000 plus 200. You're going to get the minus figure straight away. So, ladies and gentlemen, this is the part where you should be thinking of. Okay, this closing inventory is the part that you should be thinking of. Now, let's think. Let us think. You go back to here. Closing inventory overstated by 0.7 million. Closing inventory is too high. If closing inventory is too high, to correct the error, we need to lower the closing inventory. So which means I have to make this figure lower, I have to make this figure lower. If this figure is lower, okay, I give you one example, you see. Let's just use the same example. Let's just use the same example. Okay, here. Let me rewrite this so that you can see a better picture. So let's just say opening inventory, I put minus. Okay, let's just say opening inventory, I put minus 100. Purchases, I put minus 1,000. Then closing inventory, I put 200. So as you know, if I sum this up, I'm going to get my cost of sales. I'm going to get my cost of sales to be negative 900. All right, I'm going to get my cost of sales to be negative 900. Okay, so what happened if this figure becomes, for example, 150? If this figure becomes 150, you recalculate the result. See what happened. You realize that your cost of sales has increased, right? The cost of sales increased. So the relationship is like this. If closing inventory drop, cost of sales increase. If cost increase, profit drop. Okay, profit drop. So which means what we need to adjust is we need to reduce the profit for last year. Okay, we need to reduce the profit for last year. You just need to remember this actually. A very good relationship that I want you to remember is a very shortcut method is these two. You look at it. When closing inventory drop, profit will drop. When closing inventory increase, profit will increase. That will be the relationship which you have to remember. So ladies and gentlemen, maybe you should jot this down on your piece of paper. If the closing inventory movement, right, and the profit movement is in the same direction. If closing inventory increase, profit is going to increase. All right. If closing inventory increase, profit is going to increase. If it reduce, the profit will reduce. So we now know that last year profit must be reduced. Okay, if last year profit reduce, you see, because this 950, it will become the opening balance for this year. It will become the opening balance for this year. So, which means this year your cost becomes low. Your opening balance. Wait, let me demonstrate to you. Let's just say this is year 1, okay, and year 2. So your opening inventory, you are going to put 950 here already, right? You're going to put 950 here. So in short, the adjustment that you need is like this. You see, if last year profit is lower, we have to debit retained earning. We have to debit retained earning. Last year profit is lower. Last year profit. Okay, we have to debit retained earning. In this case, we debit retained earning 50. We debit retained earning 50. And we have to credit this year cost of sales 50. Now, why is that? Sorry, I dropped the wrong figure here. Now, why is that the case? Because originally, you see, originally is like this. Originally, without any adjustment, is minus 200. But after you change it, right? After you change it, it becomes 150. After you change it, it becomes 150. So in short, if the last year profit drop, this year your profit will be higher. Let us write this down. Let's write this down. If last year profit becomes lower, if the last year profit becomes lower, this year profit should increase. In short, the cost will reduce. Okay, you may want to write this down. I can give you some a few seconds. You can jot this down. Because you see, last year or if we bring forward 200, right, our cost will be minus 200. But we change it to 150. We change it to 150. So that's why our cost this year decreased. Our this year profit higher. Okay, and last year profit will become lower. Okay, last year profit will become lower. So with this understanding, ladies and gentlemen, you may need some time to understand this. But the idea is, let's look back at this. Let's look back at this case. Now, let me just move this downward. Let me just cut and paste it here. Right. In the statement of changes in equity, we have to put here prior period error. So again, last year closing inventory is overstated. Last year closing inventory is overstated. Last year closing inventory overstated. So we need to make it lower. We need to correct the error. We make it lower. If we make it lower, last year profit will be lower. As I proved to you, last year profit will be lower. So I need to minus 700. Okay, I need to minus 0.7 million here. Okay, so I need to minus 700 here. Okay, minus 700 for the prior period error, because last year closing inventory overstated. So I need to reduce last year inventory. If I reduce last year inventory, then last year profit will drop. So I'm going to minus 700 here. Okay, so the prior period error here, I will put here 1, just to show that this is for adjustment number 1. Okay, last year profit drop. Last year profit drop. With this, I'm going to get a restated balance as at 1st of January 20x5. Okay, I sum this up and then I copy this over. This becomes my restated balance. Okay, this becomes my restated balance. So, ladies and gentlemen, this is not complete. If we adjust this last year profit lower, remember, as I told you, you debit retained earning, right? Another corresponding entry is 50, because instead of bringing 200 cost down, you bring down the closing inventory of 150. So your cost becomes lower. As such, I need to go to cost of sales. So adjustment 1. Now, cost of sales, right? I need to increase it by 700. Okay, I will just type increase by 700. All right, so I need to plus 700, you see? plus 700. Huh? Okay, plus 700. Why do I plus here? Because I put a minus sign here. You see, ladies and gentlemen, I put a minus sign here. So I have to plus 700. If I plus 700, then my cost will be lower. So I plus 700. Okay, so we are done with adjusting the first adjustment. All right, we are done with adjusting for the first one. Now, anyway, ladies and gentlemen, if you have any doubts on my explanation, feel free to just drop your comment in the chat box, right? Okay, just feel free to drop the comment in the chat box. Huh? So the idea is, if last year closing inventory is overstated, what we need to do? We need to lower last year inventory. If we lower last year inventory, profit last year will be lower. So profit last year lower, I minus at the retained earning here. This is called prior period error. Last year, I retrospectively adjust the error in last year. So I'm going to change the opening balance of my statement of changes in equity. Then at the same time, because if I make the closing inventory lower, I will bring this to the cost of sales. My cost becomes lower. If my cost becomes lower, I have to reflect the fact that the cost of sales will be increased. We plus 700. We lower the cost. Okay, that's for errors number 1. Now, let us look at error number 2 now. Okay, but error number 2, let's see. So there is a provision. Related to a court case in existence since December 20X4. Okay, so there is a court case in existence since December. So December is still during the year. Okay, since December X4. So yes, during the year is going on. So there is a provision here, 4,600. Okay, the means cost settled the case on 31st December X5 for 6 million. Right? They settled the case for 6 million. Settle 6 billion. Okay, the full amount was credited correctly to cash. Yeah, because they pay money, they credit cash. Corresponding debit entry is in the suspense account. So there is a suspend account here. So they debit the 6 million to the suspense account. Now, what is the accounting treatment for this? So let me illustrate this to you. Okay, let me illustrate this to you. So the provision is 4600. Right, look at this. The provision brought forward is 4600. Okay, the provision brought forward is 4600. Now, ladies and gentlemen, they said that they have already settled the case. They already settled the case. If they already settled the case, do you still have provision balance? You won't have provision balance anymore. So we know that the provision carry forward should be 0. Okay, the provision carry forward should be 0. Now, the W entry is we credit bank. They settle for 6 million. So they credit bank 6,000. Now, to make the provision become 0, you have to debit provision 4,006. So look at this. Your provision is 4,006. Okay, your provision is 4,006. The cash balance that you pay is 6,000. Do you pay more? Yes, you pay more. All right, you pay more. So 6,000 minus 4,600, you pay more. You pay an extra 1,400. Right, you pay an extra 1,400. So this goes to SOPL. Okay, this goes to SOPL. In short, this one, it will be reduced to become 0. Debit provision. Okay, so debit provision, this will become then minus 4,006 here, it becomes 0. So this figure is going to go into your SOPL. Now, where do you charge these provision expenses to? So let's see. Well, if you're not sure, just put it in the admin expenses. Okay, just put it in the admin expenses. So maybe we can do a quick walking here. All right, we can do a quick walking here. So the quick walking here, where is it? Walking 1, provision. Okay, so provision brought forward. The provision balance brought forward is how much? The provision balance brought forward 4,600. Okay, then payment to settle the court case is 6,000. Okay, extra expense would be the extra expense would be 1,400. All right, the extra expenses would be 1,400. So we are going to put these 1,400 into admin expenses. Okay, into admin expenses. So this is how you can just show a simple working like this. You see, just a simple working. Take the provision minus the payment, the extra expenses. We put it in the admin. So your admin expenses here, you can then plus, okay, notice I put minus 10900. I put minus 10900. So I have to plus this one, 1,400. Right? Plus 1,400. So it will become, higher expenses. Okay, so we have already adjusted for this provision. We have already adjusted for this provision. Okay, third one, let's see. We have this income tax. All right, we have this income tax. Now, this income tax figure, okay, this income tax figure in the trial balance is the over or under provision from previous year. Now, it doesn't matter. You see, the income tax, right? If it is debit, you just remember in this part, you just put minus. Debit, you always put minus. Now, the complicated part could be this one. You have a look here. The current year tax is estimated to be a tax refund of 1.2 million. Now, ladies and gentlemen, you have to ask yourself this. If you get a tax refund, is it an expense? You are going to receive back the money. It is not going to be an expense. So tax refund, right? You need to make it a plus figure here, right? So because you are going to receive the tax refund, you put here plus 1,200, right? Plus 1,200. If you're going to get the refund, so plus 1,200, because a plus here means you increase the profit, right? You increase the profit. So plus 1,200. Okay, so we adjusted for the first one already. Okay, so this one should be tax credit. Yeah, I changed the tax credit because it becomes positive already. So plus 1,200. Then later on, we see this. Deferred tax liability, deferred tax liability as at the year end is estimated to be at 0.2 million. The deferred tax liability estimated to be at 0.2 million. Now, ladies and gentlemen, if you look at this, the deferred tax as at the beginning of the year is 7700. As at the end of the year, it becomes at 0.2. We realize that the deferred tax liability increase. If the deferred tax liability increase, it is an expense. It is an expense. A liability increase is an expense. So actually, you just need to do like this. So you just minus, because it's an expense, you minus. So I'll just put the closing balance at 1,002 minus the 7700. All right, so let me just zoom in for you again. You have a look. Okay. You see? Minus, we take the closing balance of the deferred tax liability, the closing balance, minus the opening balance. So because it is an increase, is in the deferred tax liability, it is an expense. All right, it is an expense. So we minus it, and your tax credit becomes 560. Okay, that's about the income tax. We are almost done. Okay, just a few more adjustments to go. Now we move on. Adjustment number 4. On 30th September 20X5, MIMSCOR made 1-for-4 rights issue. So this is rights issue. Okay, what is a rights issue? Rights issue are generally issue of shares to the existing shareholder. They issue shares to the existing shareholder, normally for a cheaper price. And the exercise price was 350 per share. If we check the question, the equity share capital is having $1 as the par value. So, which means my guess is correct. there is a share premium that I need to consider here. All right, there is a share premium that I need to consider here. So there will be a rights issue here. Now, how do you account for this right issue? We see 1-for-4 right issue. So which means you need to take 60,000 multiply by 1/4. Okay, 60,000 divide by 4 multiply by 1/4 because it is a 1-for-4 rights issue. 1-for-4 right issue. So multiply 1 divide by 4. Okay, and because of the par value is $1, so you multiply by $1. Okay, then what about the share premium? It's the same. Share premium is you still take this figure, okay, then you multiply by 1/4. But now you multiply by, you see, the proceed is 350. If par value is 1, which means here it will be 3.5 minus 1. Okay, have a look. I hope that you get this calculation. The number of shares at the beginning of the year, multiply 1/4, and then the difference is the share premium. 350 is the exercise price minus 1, the par value. Okay, so you will get 3,750. Okay, 3,750. So this one shouldn't be a problem. It says here the proceed were correctly accounted for in cash. The credit is in the suspense account. So we have to adjust it here because they pause it in the suspense account. This is not number 4. Okay, right issue done. Shouldn't take you too much of a time if you know what it is. Moving on. Okay, MIMS call acquired an investment property. MIMS call acquired an investment property for 20 million cash on 1st of January 20X5. And they decided to use the fair value model to account for investment property. Now, the property is expected to have 20 years useful life. Depreciation was recorded. Now, ladies and gentlemen, this tells you about accounting knowledge for investment property. Ladies and gentlemen, if you are still here listening to me, let me ask you something. In fair value model, do we do depreciation? Say yes if you think that yes, say no if you think that no. We don't depreciate investment property if it is using fair value model. Ladies and gentlemen, can I get your comment? Do we depreciate investment property under the fair value model? Do we do that? Yes or no? Do we do that? Do we depreciate investment property under fair value model? Yes or no? Yes or no? All right. If you remember, right? If you remember your standard well, okay. If you remember your standard well, investment property, there are two models. We have fair value model and we have cost model. Now, cost model, yes, we do depreciate. But if it is fair value model, we do not depreciate. So if they say that they charge depreciation, it is wrong already. Okay, if they charge depreciation, it is wrong already. So we have to adjust back the depreciation later on. Now, let me just do a working here. This one will be working number 2. Okay, investment property. Okay, investment property. So let's see. Here they say investment property, they purchase it on 1st of January 20X5. What is the year end? The year end is December. The year end is December. So the cost, the cost of investment property is 20 million. So in terms of thousand is 20,000. Okay, it's 20,000. Now they charge depreciation. Okay, they charge depreciation. Depreciation on investment property, okay, to be removed. So I believe they charge based on 20 years useful life. Which means, ladies and gentlemen, you see, they have charged 1,000 depreciation of investment property. Okay, and we need to remove this depreciation from the account. All right, from the account. Here it says, we move on. It says here the fair value of the property, as at the year end. Fair value of the property as at the year end is 22 million. But no accounting has taken place in relation to this. So what we need to find out is what is the fair value gain? If we use fair value model, ladies and gentlemen, if we use fair value model, fair value model means any changes in the investment property. If there's any changes in the investment property, the changes in the investment property will go to SOPL. So here, by right, the gain, fair value gain to be charged to SOPL, it should be 22 minus the cost, minus the original cost. So this 2000 should appear in SOPL. It should appear in SOPL. So I'm just calculating the relevant info. Later on, it is easier for me to adjust it in. All depreciation and amortization is charged on a pro rata basis into admin expenses. So which means that I need to remove the depreciation from the admin expenses later. There are no other acquisition or disposal of non-current asset. So ladies and gentlemen, we go through these step by step. So you see, the first thing that you have to do, we remove this depreciation. The depreciation is in admin expenses. So I have to remove these expenses. Now, these administrative expenses, okay, I have to plus this 1,000. Right? I have to plus this 1,000. Why plus? Because originally I put minus. So I have to plus 1,000. Okay, plus 1,000. So I remove the depreciation already. Okay, then there is this fair value gain. Which I need to account for it as well. So the fair value gain, I'm going to, let's see, where can I put it? I see that there is investment income. Okay, so yeah, because investment property is an investment. So I'm going to put the fair value gain in the investment income. All right, I'm going to put the fair value gain in the investment income. Now, some of you may want to put it under admin expenses or distribution costs. Yeah, it's okay. It's up to you. It's okay. The examiner actually said that you can put it under here, right? You can put it under admin expenses. You can either put it under distribution costs, but the plus and the minus sign, you must get it right. Right? You must be able to get it right. But anyway, for this purpose, I'm going to put it under investment income. Okay, I'm going to put it under investment income. So the investment income, I will take 500. Okay, I'll take this 500. I'm going to plus, I'm going to plus this one. I'm going to plus the fair value gain. Okay, I'm going to plus the fair value gain. So I will put the fair value gain under the investment income. Okay, and then we are done. So that is, so in short, ladies and gentlemen, I hope if you are listening to this, you will know that for this investment property at fair value model, any changes in the fair value goes to SOPL. It doesn't go into OCI. All right, it doesn't go into OCI. It goes into SOPL. And not just that, you do not depreciate. Okay, you do not depreciate the investment property. All right, you do not depreciate the investment property. Yeah. Okay. Yes. Is there anything else that we need to do? Okay. Remember, ladies and gentlemen, we are preparing statement of cash flow as well. So statement of cash flow here under the investing activity, you have to remember, put in purchase of investment property because they purchase it during the year. They purchased the investment property for 20 million cash on 1st of January 20X5. They purchased it during the year. So purchase of investment property, we put it here, 20,000. Okay, this one is from Note 5. Okay, this is from Note 5. Purchase of investment property. Okay. Yes, and I believe we are done with investment property. Now, Note 6. MIMS Core incurred a number of expense in relation to brand during the year, and they have capitalized the following costs as intangible asset. So, ladies and gentlemen, we need to look through these costs and we need to decide, can we capitalize these costs as an intangible asset? So here, we have 1.3 million cash. Okay, 1.3 million cash. It was paid on 1st of April 20X5 to promote one of its major brand, which is deemed to have indefinite life. But ladies and gentlemen, promotion. Can we capitalize promoting and advertisement expenses? The answer is no. Unfortunately, you cannot capitalize promotion. So this one, we have to expense off. So the administrative expenses, okay, I have to minus 1,300. Okay, the promoting of the brand, promoting of the brand. So I have to recognize this as the expense. You cannot capitalize promotion cost. So minus 1.3 under administrative expense. Now, this one, 2 million cash was paid on 1st of October. Okay, was paid on 1st of October. Take note of the dates. Sometimes students get the dates wrong. So they paid on 1st of October to acquire a brand from one of the competitor. So they buy a brand from the competitor. Now, this brand, they buy it, externally acquired brand name. They buy the brand name externally. So if they buy the brand name externally, then it is an intangible asset. They expect the brand to have a useful life of 5 years. They intend to sell after 5 years. At the point of sales, it is estimated the value of brand will have increased, so no amortization has been accounted for. Okay, ladies and gentlemen, in short, you have to understand this rule. For intangible asset with a finite useful life, for an intangible asset with a finite useful life, you have to amortize. You cannot say, oh, the value of the brand increased, so no amortization. That's not allowed. So in this case, they have done a mistake. The mistake is they do not amortize their brand, and that's not okay. They should have amortized the brand. So how much is the amortization? You have to be careful. The amortization you see is October, right? The year end is December. You can only amortize, all right? You can only amortize 3 months. October, November, December. Okay, October, November, December. So 3 months. You can choose to do the working down there, or if not, right, you can just do it here. I'm just going to do it here. So I will just put 2,000, okay, and divide by 5, then multiply 3 over 12. Okay, let me show you. Let me show you here. You see, 2,000. Okay, 2,000 divide by 5. Okay, 2,000 divide by 5. Then multiply 3 over 12. Okay, so yep, I'll get this new figure. Let me check something. 2,000 divided by 5 multiply 3 over 12. Yes, correct. All right, so here in this part, right, they are testing your understanding on intangible asset, right? So now you know, promotion, okay, promoting expenses, you cannot capitalize, it has to be expense off. When you buy brand and if it has a useful life, you have to amortize. You cannot say no amortization. Okay, the last notes here. MIMS Corp paid a dividend of 0.04 cent per share on all existing shares on 31st December 20X5. And they record the dividend paid in admin expenses. Now, can we record dividend paid in admin? No. Dividend paid has to be recorded here. Right? Dividend paid has to be recorded here. However, ladies and gentlemen, there is a common error that students make here. You read this carefully. All existing shares, right? All existing shares. It's not just on the 60,000, but you have to consider the 15,000 as well. So the dividend paid is calculated like this. So you need the sum of these two. Okay, sum of these two. Multiply 0.04. Okay, that will be 3,000. Right, that will be 3,000. No, sorry, no, I should put it under retained earning. Okay, again, you look at this. I add up these two, okay, the opening balance and the rights issue. So this is the total number of shares. the total number of shares that I have, and I multiply 4 cents per share. It will be 3,000. So this 3,000, I need to put it under retained earning. I need to minus the retained earning. So this dividend paid, because the question say they record it in admin expenses. That's not right. We need to take it out. So originally they debit administrative expenses. I have to remove it. Under administrative expenses, I have to plus the dividend 1,000. Okay, I plus the dividend 1,000. Okay, so are we done? I think we are done. All right, are we done? Let us check. Do I miss out anything? Okay, so B72, let's just double check. B72. So yes, we have extra provision 1,400. Okay, then depreciation to be removed. We will plus 1,000, correct? Then we minus 1,003, minus 1,003, correct? We have to expense it off. Then we minus the amortization, correct? And then wait. Oh, the dividend is 3,000. Sorry, my bad. The dividend is 3,000. The dividend is 3,000. My bad. Okay, yes, we get the answer already. This is the answer as per the the marking scheme. Okay, yes. Just now you see, accidentally we type in wrong. So that's why you have to check your answer. Sometimes you have to check. Make sure you don't key in the wrong figure. Okay, so this is done. Is this done? Let us just calculate the balance as at the 31st December 20x5. Okay, make sure you don't add the top part. You should start from the restated balance and you add them. So 75,000, 37,500, okay, and 37,560. Okay, so we are almost done. Now, it's just that statement of cash flow. I noticed this purchase of investment property. Are there anything? Yes, I saw this. Acquire a brand. So purchase of brand. Okay, this is not 6. Purchase of brand, 2 million. Okay, purchase of brand, 2 million. Total, so this one is net cash used in investing activities. Now, what about financing activity? Let's check. Financing activity, inventory, no. Provision, no. Provision should be under operating. Income tax, no. Yes, rights issue. So, proceeds from issue of shares. Issue of shares will be the right issue, the total of these two. Okay. Yeah, the total of these two. 15,000 and 37,500. That's proceed from issue of shares. What else? Dividend. Dividend is 3,000. Net cash from financing activities. All right, and we are done. Okay, so ladies and gentlemen, because of time constraint, I can't really, explain some of it in more detail. But if you need more information, feel free to ask me. Okay, you can ask me right now, or you can ask me in my inbox. I'll reply to you if you need more clarification. But the idea is this. The idea is this. I hope that if you are watching this, you know that by the time when we go through all the adjustment, your answer should be almost out already. So that's why you see just now, by the time we end, right, we already almost get the last answer. Even though like just now, I typed this wrongly. It doesn't matter, That is only one error. So maybe 1 mark is gone only. But at least the rest of the answer, even though the total is wrong, it doesn't matter. It doesn't matter. As long as you link this total properly, you will get a lot of marks. So these are the exam technique that I want you to learn. Now, maybe you will tell me, oh, look through all these adjustments. This one, not sure how to adjust. If you tell me like, oh, the inventory closing balance, that one very complicated, not so sure how to adjust. It's okay, don't adjust lah. You adjust for the rest of the issue. That is okay. The examiner says, you can skip the adjustment. You can skip the adjustment. So you don't really need to follow the order of the adjustment. You can, like, maybe you are more confident with income tax, you adjust income tax first. That is okay. That's okay. As long as you remember which has been adjusted, which has not been adjusted. Just try your best to come up with something. Try and link the formula, and don't worry if the total is not right. There's no penalty of the marks lah. Okay. So, yep, that concludes the first part, right, ladies and gentlemen? That concludes the first part. I want to start talking about the second part, which is on ratio analysis. How are you supposed to write that? Maybe you want to listen to that more. So, okay, ladies and gentlemen, are you ready to start the second one, or you want to ask me anything in relation to Excel? If you are still listening to me, if you are ready to start the second one, you type 222, ladies and gentlemen. Type 222. Let me know if you are ready to start the second part where I want to share about the exam technique for ratio analysis. Second part, ladies and gentlemen. Are you ready to start? Let me just drink something. I'm a bit thirsty. Right, are we ready to start? 222, right? Type 222 in the group chat. Let me know. Right? Okay, good. Now, let us start the second part now. Okay, ratio analysis. Okay, ratio analysis. A part, where student, they may feel is a bit difficult, but it's okay. I will tell you, you see, how can you maximize the marks here? How can you maximize the marks here? You maximize the marks from the ratio calculation here. This one, you must get full mark. There are some calculation questions, which I hope you know how to do. Like, for example, this one, they ask you to calculate. They ask you to calculate gain on disposal. Okay, they ask you to calculate gain on disposal. That they need to include in the console SOPL. So this one, it has been appearing in the ratio question for the past sitting as well. So I hope that you know how to calculate. If you don't, I'll show you how to calculate this later. Now B, right, it asks you, explain whether or not disposal of silver core is likely to constitute a discontinued operation. And what is the correct accounting treatment for this? So in this one, right, you also try to write something. I hope that if you revise your standard, you should know what is discontinued operation. So I'll tell you how to write. It's actually not difficult. It's actually not difficult if you know the standard wording. You just need a few sentences. Maybe 3 sentences will do already. You can get full marks already. Then the last one is analyze. This is the part where maybe students struggle. So let us read the case. At least you now know. You see, they plan the answer for you like this. A, B, C, D. So we are going to put in it here. You see, they even put the working here. So you will type the working here as well. You will type the working here as well. Now, let's see. The Pinadi Groups operates in the fragrance and cosmetic industry. Okay, ladies, you will know this industry, fragrance and cosmetic, right? Fragrance and cosmetic means perfume, those perfume. So this kind of industry. On 1st of January 20X7, that is during the year, they dispose of one of the subsidiaries, Silvercorp, for cash of 42 million. So in calculating this gain on disposal, you need this cash of 42 million. So I will just quickly put it down before I forgot. Proceed, okay, of disposal is 42 million. Okay, I just put it down in case if I forgot. Silvercorp, the subsidiary, manufactures jewelry. You see, first you have to think of it like this. Fragrance and cosmetic industry is perfume. Jewelry is not perfume, So it's a totally separate industry. It's not the same industry. It's a separate industry. And it was so, okay, because Pinadi Group wanted to exit this particular sector. They don't want to do this jewelry business anymore. Now, why is that the case? We don't know. Maybe we read the case, we will know. But maybe I'm starting to think perhaps they want to focus more on this industry. They may want to focus more on the fragrance and cosmetic industry rather than they want to focus on jewelry. So here they ask you to analyze the performance and position of the Pinadi group, right? Compared to X6. So remember, in analysis of D, in analysis in part D, right? You remember you have to consider the effect of disposal of silver core. So which means that when you comment, you please take note, because 20x7 result, there is no result. 20x7, there is no revenue for silver core anymore. So you have to consider the effect of disposal on silver core. That is very important. The examiner said that students, if they don't consider about this, they cannot score a lot of marks. So make sure you read the case carefully and you look at the case. If they want us to compare the performance and position, since last year you have sub-C, this year you don't have the sub-C, it is something that must be commented. Extract from the console financial statement are as follows. Okay, so we have revenue, cost of sale. A rough estimate we see is that revenue drop, cost drop, everything drop. But surprisingly, you see the gross profit increased by 100,000. You see that? Surprisingly, the gross profit increased by 100,000. That's good. I think it's a good sign, Hey, wait. Yeah, correct. It increased. Then the cost reduced, profit increase. So yeah, it seems, I don't know why, but after they dispose of silver, their profit becomes better. Maybe it's a good sign. So from here, I put down a point. Maybe it is a good decision to dispose silver core. Okay, because profit increase after disposal of silver core. Okay, so this is something that I hope when you read through, right, you can start to think of it like this. And when you think of some point, you just type the point form here. All right, then you later on you know what to write. As you read, you start to think. Okay, then we see that inventory also reduced. Okay, inventory reduced. Inventories reduced. Now, why inventory reduced? Silver sells jewelry. It was being disposed of. So jewelry is more expensive, right? I think you will agree. Jewelry is more expensive. So maybe it's due to disposal of silver. So there is no more jewelry inventory that is having a higher cost. Perhaps that could be one reason, That could be one reason why the inventory drops. That could be one reason why the inventory drop. Could be because there's no more jewelry inventory. So they remove higher cost inventories. That's why it becomes lower, maybe. Cash increase. That's a good sign. Okay, cash increase. Cash increase. Okay, a good sign. Okay, we also see that the NCL increase. Okay, not sure why, but we have to find NCL reduced, NCL reduced, the non-current liability reduced. It is a good sign as well. It is a good sign as well. We need to find out why. Now, ladies and gentlemen, you see, this is how you are going to comment about ratio. You always focus on the why. You see something change, why? Inventory dropped, why? Profit increase, why? As long as you can explain why, you will get the marks. Okay, jot this now. Write down the word why. Okay, why is a very important question to be answered in this kind of case. Okay, why? So to answer why, you may get answer by reading something here. If you can get something from here and put it in your answer becomes very good. So I'm going to show you how you put those answers in. Okay, we need to first solve the gain on disposal issue first. All right, we need to solve the gain on disposal issue. So here, we only know that the disposal proceed is 42 million. Okay, we only know the disposal proceed is 42 million. Okay, and here we see that the accounting assistant has not accounted for Silva Core as a discontinued operation. So they didn't treat Silva Core as a discontinued operation because the disposal occurred on 1st of January 20X7. So they say because the disposal happened on the beginning of the year, there is no discontinued operation. Is that right? I will explain whether it is right for you later on. Now, no figures from Silva Core has been included in the 20X7 financial statement extract above. Okay, so which means Silva Core result, there is nothing here in 20X7. Okay, because they sell off on the first day, there is nothing. The proceed from disposal is recorded in cash, and with all the net asset and goodwill de-recognized, the balancing figure was held in a suspense account. Okay, so this one is, we don't need to care about this, but we need to care about this. Pinadi Core acquired 100% of Silva Core on 1st of January 20X1. And goodwill is 6 million. Goodwill is 6 million. Goodwill, there is an impairment of 30% in 20X5. The net asset as at 1st of January X7, as at the date of disposal, 1st of January 20X7 were 35 million. Now, with this information, you will be able to calculate the gain on disposal. So how do you calculate the gain on disposal? Let me just draw a table. Okay? Let me just draw a table. Okay, so we have the proceed of disposal of Silva Core. That is 42,000. All right, that is 42,000. Okay, then we will less net asset of Silva Core. Net asset is 35 million. Remember, you have to de-recognize the goodwill as well. So we de-recognize the asset, the net asset, we also de-recognize the goodwill. But the goodwill is impaired by 30%. So you need to take the goodwill 6 million, okay? Impaired by 30%, so minus 6,000 multiply 30%. You see, to increase another row, I just press tab. Okay, you just press tab, it will increase another row. So the goodwill, after you account for 30% impairment, it becomes 4,200. So what do you get? This one should be a gain. Okay? Gain on disposal of Silva Core. 32,000 minus 35,000 minus 4,200. That will be 2,800. Okay, that will be 2,800. Okay, so consider as an easy mark. All right, consider as an easy mark. You can score 2 marks straight away by just doing this calculation. Okay, so if you know this, shouldn't be a problem. Now, the next question is disposal of Silva Core a discontinued operation? And what is the correct accounting treatment? So let us see, ladies and gentlemen. I do a quick recap with you. Okay, let's do a quick recap. Discontinued operation. Now, what is discontinued operation? Okay, what is discontinued operation? A discontinued operation, right, is an operation, okay, that has been disposed of. Okay, it's an operation that has been disposed of or held for sale. And this operation has to represent, okay, it has to represent a separate major line of business. Okay, you have to represent a separate major line of business or a separate geographical location. Do you get marks if you write something like this in your answer? Yes, you do. If you write something like this, you actually get the marks. So maybe let's write this down. if you know the standard, if you know the keyword like this, right? We just try our best to type it in. So maybe I'll just write discontinued operation, okay, are operation that has been sold, okay, or held for sale, okay, and it represents a separate major line of business or geographical location. So that is the first thing we say. We want to say, yes, we understand what is discontinued operation. Discontinued operation are operation that has been sold away or it is held for sale. And it is a separate major line of the business or geographical location. So, okay, then let's look at this case. Pinadi Groups is in the fragrance and cosmetic industry. You see, I just copy. Silvercore manufactures jewelries. Now, are they the same? If we sell off Silvercore, is it a separate major line of business? You think of it. Fragrance, cosmetic, those are perfume. Jewelry, it's not the same, One is solid, one is liquid. It's not the same. So I think we can say it is a separate major line of business. It appears that Silvercore is a separate major line of business, okay, which has been sold during the year. Okay, as such, Silvercore should be a discontinued operation. So this one, right, is just to comment. It's just to comment. Yes, it is a separate major line of business. It should be discontinued. Okay, it should be discontinued. Now, have we answered the question? Is it discontinued? We answered the first part. What is the correct accounting treatment? Okay, so we write a bit. As discontinued operation. Now, in this case, there is no figure from Silvercore. There is no figure from Silvercore. So you don't say that the result of Silvercore is presented separately, but maybe you can say like this. You can say, the gain on disposal of Silvercore, okay, the gain on disposal of Silvercore should be presented separately. Okay, should be presented separately, as result from discontinued operation in the statement of profit or loss. Okay, so we have to present, because there's still a gain or loss, on Silvercore. That one is a discontinued operation. So we are going to put that Silvercore, the discontinued operation, we are going to put it separately in the statement of profit or loss. All right, we put them separately. Now, after we put them separately, if you know about this, last year, you have to change the presentation also. You can say the prior year result, okay, of Silvercore should also be presented separately as result from discontinued operation, okay, in the statement of profit or loss. All right, that's all. Okay, that's all. So the answer is, ladies and gentlemen, I tell you, this answer is a bit long, but if the examiner see these few things, I highlight for you. If they see that you write about this, if you say that Silvercore is a separate major line of business, okay, if it is a separate major line of business, and it has been sold during the year, so it is discontinued, you will get the marks already. The one that I highlight, these are important. Separate major line of business, sold during the year, that's why it is a discontinued operation. Now, discontinued operation presents separately, okay? Presents separately, as discontinued operation. Okay, present separately and discontinued operation. The gain on disposal presented separately. Okay, that's enough. Maybe like this, you get 2 marks already. How many marks is this? 3 marks. You get another marks if you can talk about prior year result. Okay, also discontinued. So let me tell you something, ladies and gentlemen. If you can write these two, you can already score 2. Don't leave empty. If you study the syllabus, I'm sure you do, you will roughly know that discontinued operation means a separate major line of business. Okay, you will roughly know that it represents a separate major line of business. So that's why you should be able to write something about it. Okay, you should be able to write something about it. Okay, so that concludes part B. Now, what about part C? Part C, ratio. Okay, ratio, you have to be very familiar with the working. All right, you have to be very familiar with the working. So let me do the working together with you quickly. Okay, because my focus later on, I want to tell you how to explain. So look at this. Gross profit margin. %51.6%. 41.3%. So as you can see, right, profitability, their ratio increased quite a lot, and that is a good sign. Second one is what? Operating profit margin. Okay, operating profit margin, we will get the profit from operation. %17.3%. One three 200 divide by 122 400, multiply 100%. 10.9%. Okay, we also see that it increased. Good. What's the third one? Interest cover. Okay, interest cover, you take profit from operation, divide by finance cost. Around 5.3 times. $2.4 times. Finally, they're asking about inventory turnover period. Inventory turnover period will be inventory divided by cost of sales. Multiply 365 days. 102 days. 102 days. One 4 days. Okay, so inventory turnover period also reduce. All right, also reduce. Now it is time to comment already. Okay, it's time to comment. Okay, but before we comment, we have to read through this information. All right, we have to read through this information and we try our best to see whether if there's anything that we can comment. So now let's see. So first thing first, you see here, as part of the sales agreement, Pinadi Group received annual fee of 2 million for the use of Silva Core brand. So Pinadi Group received annual fee of 2 million. the annual fee is included in the group revenue for X7. So this is one of the reasons why revenue has increased. So ladies and gentlemen, the question asks for the performance, right? They ask for analyze the performance. So maybe first we can talk about this. Performance, right? Performance, huh? Now, performance, I will talk about revenue, right? Let us talk about the revenue. Okay, the revenue. Revenue has dropped, right? Revenue has dropped. So we can say, the group. Okay, yeah. Before that, maybe I give you this, Okay, I write something for you. How do you write your answer? How do you write your analysis? So this one might be useful to you. First step, the first step for analysis question. Okay, for analysis question, the first step, maybe you write the trend. Does it reduce? Does it increase? How much? Okay. How many percent? Okay. Second, you say why. Okay. You say why. After you say why, you are going to link to the case. So I'll show you how this is done. Okay. I'll show you how this is done. Normally 2 and 3 is together. 2 and 3 is together. So you see, revenue drop. So we can say the group revenue has reduced by how much? We calculate. Okay, is around 24 million. All right, around 24 million. Okay, so you write like this. The first sentence, I think everyone can write like this. It will be quite easy for you to write, like group revenue reduce or, whatever increase. So performance, right, is about profitability. It is about revenue. So revenue now drop. Revenue now drop by around 24 million. Next question, why? Remember this? Consider the effect of disposal. Okay, you can say, this is due to, this is due to the disposal of silver core. Okay, where in the year ended 31st December 20x6, revenue of silver core is consolidated, but there is no revenue of silver core for the year ended 31st December 20x7. So you see, this is the statement that can give you the marks. You just have to say, because last year silver core is still around. Because last year silver core is still around, so we have the revenue for silver core here. But this year, there's no silver core, so that's why the revenue here is lower. Okay, it's lower. Now, the question here, right? If you look at this part, they do give us silver core individual published financial statement. Okay, they do give us this. Now, last year is 36. Last year is 36. So what we can do is, maybe we can take this 122,400, we minus this 36,000. Okay, so maybe we can do like this. We say, if the revenue of silver core, of 36 million is removed from the group revenue for the year ended 31st December 20x6, is removed from the group revenue. If we remove it, the revenue for the revenue will become how much? Let's calculate. will become 86.4 million. Now, ladies and gentlemen, you see what I'm trying to do? What I'm trying to do is I am actually taking out silver core revenue from this part. I'm taking it out. So if I take 122,400 out, right, it becomes 86.4. And you compare with this year 98.3, the trend, the underlying trend is actually increasing, you know. So it's a good sign. So you can say like this, if this is compared with current year revenue of 98.3 million, the revenue has increased by 11.9 million. You see? The revenue has increased by 11.9. So, okay, we already explained this. Okay, we already explained this. Now, maybe you want to talk about this as well? You want to talk about this? This one. This increase is partly due to the receipt of this one, annual fee of 2 million for the use of silver core brand. Okay, so you see, this is what I mean by you link to the case. The case info is here, you copy and you paste it in. That is what the examiner want. So this is called analysis, you know. Yes, we see, I want you to see the process. Although the revenue drop, right? Although the revenue drop, but if we remove last year revenue, because last year you have silver, we remove last year revenue, actually it increased quite a lot. And this increase quite a lot, part of it is the 2 million. Part is 2 million. So now when the investor look at the report, they know, oh, actually, although reduced, right, it's still a good thing. Right? It is still a good thing. So now let us comment about gross profit margin. Gross profit margin. So the gross profit margin has also improved from how many percent? Around 41 to 52. Okay, from 41% to 52%. It's okay. I can round it up in my answer here. No problem. If you want to write the decimal, that is okay as well. So gross profit margin improved. Remember, always look at this. Why? Think of why. Now, why is it that that is the case? Okay, maybe you can say this. Okay, to understand this one, right? Maybe you look at silver core. Silver core. What is the profit margin for silver core for 20x6? So you can try calculate. I calculate down here. 12,600 divided by 36,000. That is 35%. So can you see now? Silver core gross profit is actually lower. So if you remove that, the average improve. Okay, so maybe we can say silver core gross profit margin. Okay, silver core gross profit margin in 20x6 is 35%. Okay, silver core gross profit margin is 35%. So you can say this shows that this one, the fragrance and cosmetic industry of the Pinadi Group can generate a higher gross profit margin if compared to the jewelry sector of silver core. So this is your analysis, you know. The trend is gross profit margin increase. Okay, the trend is gross profit margin increase. And if you compare with silver core, gross profit margin is lower, which means fragrance and cosmetic earn higher. Okay, earn higher if compared to the jewelry sector. Okay, if you want to explain more, right, maybe you can say this could be due to higher cost of jewelry if compared to fragrance and cosmetic, which is true lah. Jewelry is having a higher cost, right? It's a tangible one, but perfume cost is very low one. The cost is very low. It's just the selling price is higher. So yeah, we can see that after we dispose of silver core, the profitability has becomes better. Okay, now what else? Okay, what else? Let's talk about operating profit margin then. Okay, the operating profit margin has also improved from 11% to 17%. Okay, increase. Now, the increase, right, is not as much as gross profit margin, right? If you have a look, the increase here is only 6%. But the gross profit margin, you see, 52 minus 41, the gross profit margin increased 11%, but the operating profit margin increased just a bit. So maybe you can say the increase is lesser than the increase in gross profit margin. Why? Okay, why? To understand why, read the case. So we look at maybe part 5. Prior to the disposal of silver core, silver core used to use some property belonging to the Pinadi Group. Following the disposal, the Pinadi Group moved its cosmetic division into the property. Previously, the cosmetic division has leased external facility for 2.5 million a year. At 1st of January 20X7, the lease had 10 years remaining. So to exit the lease, Pinadi Group made a one-off payment of 3 million. They made a one-off payment of 3 million to the lessor, and they record it as operating expenses. So which means, ladies and gentlemen, this shows what? This shows that in this year, there is a one-off payment of 3 million. One-off only. Okay, one-off. So if we look at this, one-off. So maybe we can say like this. And maybe I will just link. This could be due to this one. I just copy. Due to the one-off payment of 3 million to the lessor in order to exit the lease. Okay? In order to exit the lease. So that's why the increase is lesser. So you see, I'm using this one. What's the trend? Yeah, the trend increase. Not much. Why? Why? So why? I copy from the case law. Okay, I copy from the case. Okay? Copy, link to the case. I am trying to copy from the case. Now, is this good? One-off payment. Only one-off. Okay, maybe I will say, yeah, you see, if you don't cancel, right, you have to pay for the next 10 years 2.5 million, So that is a lot. So you can say, you can maybe say something like this. Despite the one-off expense, this payment can help Pinadi Group to save the future lease payment for the next 10 years. Okay, it can help them to save the future lease payment for the next 10 years. As such, the operating profit margin should improve in the next year. Okay, so that's why it should improve in the next year. So you see, this is called comment. Yeah, we pay this one-off 3 million. That's why the expenses is higher a bit. But it's okay. This year higher only. Next year, we don't need to pay the lease payment anymore. So that's why next year, the operating profit margin should improve. Now, there's another one more notes here. There's another one more notes here. Pinadi Groups acquires raw material from overseas. In 20x6, there is a foreign exchange gain. Oh, last year you have gain. 20x7, there is a foreign exchange loss. Okay, so I'm going to write this. Another reason, okay, another reason for the less for the what is that? For the increase of operating profit margin to be lesser than the increase in gross profit margin is due to foreign exchange loss of 1 million in the year 20x7. Okay, but in the year 20x6, there is a foreign exchange gain of 3 million. So that also explains the reason of why the increase in the operating profit margin is lesser than expected. Now, we comment on the next ratio. Okay, interest cover, right? Interest cover. The interest cover increase. Okay. The interest cover has increased from 2.4 times to 5.3 times. Right? The interest cover has increased from 2.4 times to 5.3 times. Now, why is this the case? Okay, why is this the case? Always remember, ask why. Now, how do you calculate interest cover? Interest cover is you take the operating profit divided by the finance cost. So we can see that one of the reasons is the profit for operation increase. So we can say this is due to higher profit from operation, okay, as well as a lower finance cost. Ask why again. Why finance cost reduce? If you look through all the information here, do you see any loan? You don't see any loan, but there is this thing called a lease. If you remember the accounting treatment for a lease, you know that for lease, right, we need to recognize finance income. Like, you know, the lease liability, you need to add finance income. So that is why you can say the lower finance cost, okay, could be due to the decrease in due to the exit, okay, of the lease of the external facility. All right, so that's why as I always tell you, you always put the trend, ask why, and ask why. Try and find something to link to the case. So this is why. This sentence here is why. This is linking to the case. Try and write something from the case. As you can see, right, I hope from now, from this part, you will see that I am actively using this information. I am actively copy and paste in. You should do that in the exam as well. You need to actively copy and paste that into your answer. Okay, a little bit more because they are asking about what is it? Position as well. So position, we have two ratio, interest cover and inventory turnover period as well as the cash balance and the non-current liability. Okay, so maybe we can comment a bit more. So position. So inventory turnover period, right? The inventory turnover period, it has reduced from 114 to 102 days. Okay, the inventory turnover has reduced. Okay, this shows that the group can sell their inventory faster. Okay, as usual, we just say this shows that the group can sell their inventory faster. Now, not just that, not just they can sell the inventory faster, you have to also mention this could also be due to the disposal of silver core, where the inventories of silver core is no longer consolidated in the year 20x7. Okay, this can be due to this as well. They don't consolidate it as well. All right, so this would also mean that the inventory turnover period for what? For the fragrance and cosmetic is lower, okay, is shorter than the inventory turnover period for jewelry. So you see the trend. I write the trend. It reduced, right? It reduced. So what does this mean? It means they can sell faster lah. Okay, or maybe because of you dispose of silver, so there's no more inventory. That is why the inventory drop. And also it could also mean that the turnover period is also shorter. Now, okay, inventory we are done. Okay, maybe we can say the cash. Okay, the cash balance has increased. All right, the cash balance has increased. How much? Let's see. Okay, by around 70 million. Okay, around rounded off. So 31.4 minus 14.6. The non-current liability has reduced from has reduced by, okay, I just calculate 61 minus 42, 19 million. Okay, so I explained the reason. The increase in cash, okay, the increase in cash is partly due to why? Why is it that the cash has increased? The cash is increased, right? Because they sell off, right? If you see here, if you find cash, right? When they sell off the subsidiary, they record the proceed in cash. Okay, partly due to the disposal of silver core for 42 million. Then from this sell off of this silver core 42 million, very likely they use the money to pay off the lease, the liability. So you can say it is likely that this proceed is used to pay off some non-current liabilities, including the lease. Okay, including the lease of the external facilities. Okay, which result in the non-current liability to reduce. So again, it's the question of why. Why cash increase? They sell off the subsidy, they receive money. But not as much because very likely they use it to pay off the liability. So that's why liability drop. Okay, you can also say this. Another reason is you want to say about the liability is maybe you can say another reason for the non-current liability to reduce is that the liabilities of silver core is no longer consolidated in the year 20x7. That is also another reason. As you know, console, right? When we console, we do not consolidate we will consolidate the subsidy liability. But now that they have sell off the subsidiary, so there's no more, there is no more liability of silver core. So that's why the liability of silver core is no longer consolidated in 20x7. Okay, remember when you write about this analysis, you need to give a conclusion. Just a short one will do. Okay, just a short one. So what is your conclusion? Is it a good choice? I think it is a good choice. It appears that, the decision to sell off Silva Corp is the right decision for Pinadi Group. Okay, it is the right decision for Pinadi Group. Why is it good? We will say something. This is evidence. Okay, this is evidence by the increase in the underlying revenue. Okay, underlying revenue. The one that we exclude, the revenue of the Silva. Okay, so from 86.4 to 98.3. Okay, so this is evidenced by the increase in the underlying revenue, increase in gross profit margin, okay, operating profit margin, improvement in what is that? The ratio, improvement in interest cover, and decrease in inventory holding period. Okay, this shows that by focusing only on fragrance and cosmetic industry, okay, this shows that by only focusing only on fragrance and cosmetic industry, Pinadi Group can achieve a better financial performance and financial position. Okay, that will be enough. Okay, that will be enough. So yeah, I think I talked about all these things already. Yep. So done. Okay, so ladies and gentlemen, you see, I hope that by going through the write-up with you, okay, at least you have a look how I write. The technique that I use is always this. Talk about the trend. Is it increase? Does it decrease? How much? How many percent if you want? Why? Why does it reduce? Why does it increase? Find the information from the case. Okay, find the information from the case. Just copy and paste. Just try your best, copy and paste the information there. Copy and paste it in. If you can do that, you should be able to come up with something. Now, do I expect you in the exam to write exactly like what I write? No, I don't think so. You don't need to write like this. But as I told you, what is the strategy to pass this paper? Try to score high marks for the Excel question, because I assume that you have been practicing a lot of Excel question. You should be. Okay, and then this part, since the student always struggle, so I will just tell student, it's okay. Try your best. Use this technique. Just try and write something. And you don't overspend your time here. You see, this analysis question is only 11 marks. So if you take 11 multiplied by 1.8, you have around 20 minutes only. You have around 20 minutes to write this only, So this is a bit too long to be produced in the exam condition, but it's okay. You don't need to produce exactly like this. The exact answer that I produce is a full mark answer. You only want to pass. If you can get 5 or 6 marks, you see, the idea is like this, If you can get 5 marks here, and if you can get ratio 4 marks here, the gain on disposal, assuming you already get 11 marks, right? You already get 11 marks. So you already passed this question. So that is what you should aim. I don't want you to leave this part of the answer blank. Analysis, no matter what, you should write something. Okay, and you learn something today. Like if there is a dispute, if last year you have subsidiary, this year you don't have, you need to make it comparable. You may need to remove last year's subsidiary result, and then you compare, right? Then you compare. Or maybe if the question changed a bit, the question say last year there's no subsidy, but this year you have subsidy. You may want to take out the subsidy result and you analyze it separately, and then you see the underlying trend. So the idea is comparability. Remember, in order to analyze, you must make sure that you fulfill this thing called comparability. You have to consider when you compare, is it comparable? Is it apple to apple? Right? Is it apple to apple? Not apple to Huawei, but apple to apple. Okay, apple to apple. Okay, and just try your best to write. Then with this, if you can maximize your marks in the Excel question, and if you can maximize your marks in this what is that analysis question, MCQ, I wish you all the best. Try your best to score more than half, like, try your best to score more than half. So let me tell you, to summarize, your exam technique should be like this. Try and score more than 50 marks here. Meaning to say, try and get at least 15 questions correct. Okay, at least 15 questions correct. Get at least 15 questions correct. Individual financial statement or console, this one you should maximize your marks if possible. Maybe 17 to 18. This one, as I show you just now, it is possible to get 10. It is possible to get 10. So if you get marks like this, right, you should pass already, You should pass. So like, you see, this one, 57 already. So you should be able to pass. So that shall be your exam technique that you need to work on. So there are still time, ladies and gentlemen. There are still time. Today is only Saturday. Your exam is when? Your exam is next Thursday, right? So there are still some time. So perhaps what you can do now before the exam is you try and do some past year paper. Maybe you look through some ratio analysis question. Maybe for the recent 4 to 5 sitting, you look at how they comment. Individual financial statement, you must practice. Okay, practice in this CBE platform, you must practice. Okay, and then MCQ, I give you something. MCQ here, you can get some MCQ question in the examiner report. You can get the MCQ, some question in the examiner report. The examiner did publish some of it. You look through that, you will have some idea of what are the MCQ looks like. So look at this. Go and look at this. It will be very useful to you. If you have BPP revision kit, do your BPP revision kit. Okay, and do not to forget, at this stage, you should not study the textbook. Don't go and study the standard. Like you go through the textbook from first page to the last. No, you don't do that. Now it's only revision. You revise the main point only. Okay, you only revise the main point. You do not revise everything in detail. Maybe your notes are very thick. It's okay. You don't look through the notes now. Look through just the some summary. Okay, just get the main point. Practice more past year. It will help you. All right, it will help you. So, ladies and gentlemen, do you have any question that you want to ask before I end this session? Yeah, it's 5 or 6, 2 hours plus already. Okay, I hope that at least although this is like a very is because in a normal revision class, I will go through it slower lah. But because this one is like a 2 hours crash revision, I want to show you as much as possible. So as you watch through how I do it, I hope to give you an idea of how are you going to approach it in the exam, because what I show you is what you should do in the exam. So any question you want to ask, ladies and gentlemen, before I end? Any question? Yeah, if there is, you just type. If there's no question, maybe you can type 000. Let me know that you don't have any question. Okay. Any things that you want to ask? Yes? No? All right. Seems like there's no question flowing in. No question flowing in. All right. If no question, then I want to wish you all the best. Okay, I wish you all the best. I wish you all the best. Hopefully, you get the question that you know how to attempt in your March exam. All right. And if you have any question, but if maybe you are too shy to ask, or maybe you are not watching the live stream and you watch the recording one, right? You want to ask something, inbox me. Okay, I'll find some time to reply to you. Okay, that will be all, ladies and gentlemen. Thank you very much. I wish you all the best, right? I wish you all the best. So take care. Okay, take care. Tomorrow I will be doing SBR live stream. So if you are taking SBR, you are welcome to attend as well. Thank you very much for watching. Have a good day, everyone. Have a good Saturday. Bye bye.